So gold is the best performing commodity so far this year. Do you think this rally has legs?
Yeah, I think it does, Shauna. I think we're seeing increased credit risk. There's been a lot of news about Deutsche Bank's derivative book. We've seen negative interest rates on the Japanese 10-year bond now for the first time ever. I think there's a lot of credit risk in the market, Shauna, and I think gold is benefiting from that credit risk.
Gold has always traditionally been a hedge against inflation, and if these central banks ever become successful in their pursuit of creating inflation, what will that mean for the price of the yellow metal?
Obviously, gold is a store of value. It's held its value over time. There's an adage that an ounce of gold buys you a nice suit in London or New York, and it did in London about 300 or 400 years ago. So gold holds its value over time. It will therefore increase in price relative to fiat currencies in that case scenario.
I'll be watching for U.S. Mint sales figures, which yesterday posted a single-day record for gold ounces sold, as well as General Electric's earnings per share as a bellwether for economic health. If GE reports EPS lower than analyst estimates of 35 cents, investors should anticipate increased market intervention by the Fed to keep interest rates low and avoid price deflation. Given that gold and silver prices perform best when real interest rates are negative, any signs pointing toward the extension of the Fed's zero interest rate policy is very bullish for physical gold and silver bullion prices.
Well, I think one of the big things people like about Bitcoin is the fact that it's immutable, so it can't be changed in terms of the ledger, and also that the idea that there's a fixed number of Bitcoin and block size. And so I think one of the issues is that by increasing the number of transactions per block, it ultimately will lower the price of the Bitcoin, small b, the currency, because ultimately more transactions will go through. So Bitcoin is layer 0. We've seen other layers. Counterparty is what our product, our beta product, Hyatt Gold, is built on. So it's just like the internet. There are multiple layers, and I think it's really important that we have stability and we do things in a very smart, intelligent, best practices way. And that's where I think getting these PhD core developers, we have to really understand why is it that they're not on board. And I don't think that that's really clear yet. If you take a look at the ETF HYG, you'll see that there's been a deterioration already, really since about mid-year, but it's escalated since then on high-yield bonds. So I think with the increase in the Fed funds rate, I think that we're seeing this perfect storm brewing, and it could really potentially affect the banking system more greatly. I think it's something to watch out for.
So we're going to get the FOMC minutes out today. What are you expecting those minutes to show, and how much higher can gold go?
Well, I think we're going to see increased uncertainty. I frankly, Maria, don't think we're going to see enough uncertainty out of the Fed. I think we really do need to see additional quantitative easing. I think there's a lot of credit risk in the markets. I think Deutsche Bank coming out and releasing really negative earnings speaks to that. I think we're not seeing really positive earnings yet. I think we're seeing labor participation rates still really low. Where we should be at the cycle should be very, very positive figures all across the board. We're not seeing that.
Anthem, weigh in here in terms of gold money, as well as looking at the gold and silver industry. What's your take on Bitcoin?
Well, I think that Bitcoin, people say it's a representation of gold in the digital space. I really look at Bitcoin more as a vehicle. I think it's a massive innovation. I think what underlies Bitcoin, which is called blockchain, it allows complete transparency. It allows complete decentralized clearing. And we have so much systemic risk as we do today currently with the central banking system. We've just seen just masses and masses of printing. And it looks like we're seeing a curtailing of QE. I expect that to come back sometime in 2015. We've seen the deficit numbers come off, so that's taken a little bit of pressure off the Federal Reserve, but definitely a lot of easy money out there. There's a lot of zero interest rate borrowing that's going on by big financial institutions, and probably one reason why you see a lot of the big social media stocks like Twitter and Facebook really rising is a lot of cheap, fast money out there. I think it's really emblematic of the disconnect that we have between high net worth individuals and the nearly half of Americans that are working paycheck to paycheck. And I think what's really unfortunate about this is either the denial or not recognition, or simply not telling these high net worth individuals, not telling the rest of America that the reason for this is because of the Federal Reserve's inflation policies and printing, which have gone on for 100 years. Because you see, Jerry, what that does is it increases the cost of basic goods and services like food and energy that make up a much higher percentage of the average working American's total income and total net worth versus very ultra net worth individuals. And frankly, from a leader like Hillary Clinton, I'm really disappointed.
What are we looking at when it comes to gold right now? Do you like it? Do you hate it?
I really like it here. I don't think that there's a ton of downside. I think given all the volatility that Dominic and some of your other guests have picked up on, I really think it's a great play here. I think that we're going to see increased volatility out of emerging markets. I think we're seeing ruminations out of India, and I think it makes gold a really attractive play.
You brought up a great point, though, on trust, and this is where the gold market meets the cryptocurrency blockchain market is trust. And you were talking earlier, and maybe you can talk a little bit about it now, about auditing how untrustworthy it really is and how the blockchain can change all that, and how you are using that within your own business and with this new token that you're doing with Hercules.
The reality is that accounting and auditing today is a joke, and the faster information gets to us and messages to us, the faster it becomes a joke. And yet our entire world economy relies on a foundation of a joke. That's something that's really exciting, and instant redeemability and instant usability, and we're continuing to converse with different exchanges and wallets, and it's really exciting times.
What would you say to people who may be a bit skeptical about this online transactions and the cybersecurity that goes along with the blockchain movement?
Well, I think it's just like we thought about the internet, and there was a period of time when we were really afraid about transacting online and putting our credit cards online, but now we use online services all the time, and the same thing is going to happen with blockchain technology. So it's scary right now, it's new, everything new is scary, but there's tremendous opportunity. I think start with Bitcoin, it's the biggest, the most widely adopted, the most widely used, and then explore from there, more avant-garde or risky sometimes, and just treat it like an experiment. So be careful and have fun with it and stay curious.